Good day, everyone. This is Jack from the Stock Serpent Watchdog. Today, I want to start off with an extra segment that I hope gets some traction called the Daily Market Wrap. We will cover daily action in major asset classes, starting with U.S. equities, the Standard & Poor's S&P 500, the U.S. dollar index, crude oil, gold, U.S. Treasury bonds. Then I'll pick a speculative sector for that day. Today it is the GDX senior gold miners. And there will be a stock of the day. Today's stock of the day will be Apple. And let's get started right away. Let's keep this short and to the point. So here we are. First thing we look at when we look at our Ichimoku chart overlaying the S&P 500 here is that the cloud is overpriced. That means that price is bearish relative to the cloud. Okay, so here's the cloud. Here is price action. It is trading under the cloud, and that means, in my view, this is not a buy in any way because my first indicator tells me to stay out of this market. It is definitely not a market to be long in, and I will stay out of this for the time being. Now, there are some more indicators. Let's look at the other indicators. There are 5 in total. The second one here is my blue line. My blue line is what I call a Tenkan-sen. It's the Tenkan-sen line. It's a 9-day midpoint moving average. Price could not exceed it. It rallied up almost to touch it, and it moved back down. The third indicator is my Kijun-sen, this red line. That is a 26 period midpoint moving average. And price, again, look at that. It moved up and it moved through it and it got rejected and it moved all the way down. All right, so clearly here the midpoint moving averages are causing some support for price, some resistance for price, excuse me. All right, so this is very negative price action in the SPX. Let's move on to the third indicator. The third indicator here is the Chicago span. The Chicago span is my closing price. Look at that. Here it is. It's my closing price plotted back 26 days. And what is it telling me? It is telling me that price is now over the Chicago span, and the Chicago span is bearish. Because it is trading under price, it is bearish. It's been bearish ever since it moved under price here, and it's been ultra bearish since it moved under the cloud here. So let's not belabor that point. It is definitely bearish, and I would not be in this market right now on the long side. That is for sure. By the way, my comments are those for those of you who are long. I am not a short trader. I will only comment on the long side. Okay, that's for retail investors and retail speculators. Let's move on. Next up are my resistance levels on the cloud. Okay, on the cloud, we are looking at the Senkou span. This is the first edge of the cloud. The first edge of the cloud is, wow, that's significantly above where price is trading right now. Price is trading at just over 2,700, and the first resistance level comes in, well, to be honest, both resistance levels on the cloud come in at about 2,800 or just over 2,800. All right, so that would be my Senkou span A and my Senkou span B. The big difference between the two is that the Senkou span A is a shorter term resistance line, while this red line at the top, it made this little flat top here, and this longer flat horizontal line here is a very slow moving indicator in this analytical tool called the Ichimoku Kinko Heion. So clearly there is strong resistance here, and there's strong resistance here when price trades up over there, but we'll comment on them later in the week. Let's move on to our next chart. The US dollar, here's the US dollar chart. The US dollar looks strong as ever. Let's look at where it is trading relative to the cloud. Here's the cloud. Here is the price action. It is well above the cloud, and the US dollar is on a tear. It's really, really bullish. It is not just above the cloud, it is also trading above the fast moving average line. Here, the Tenkan-sen. And remember what I said in a process video before. I said that this Tenkan-sen draws price to it if it gets too far extended above it. Well, this is what's happening. It is drawing it to it. This will offer support. So support comes in at about 96.50. So very, very bullish. It is trading above the Kijun-sen, the 26-point moving average, and that is significantly bullish, I have to say. All right, so everyone here calling for a drop, a crash in the dollar. You are definitely on the wrong side of that trade. This is bullish. We don't know how long we're going to stay bullish, but that remains to be seen. For those who follow Elliott Wave, here you can see there are clearly 5 waves up from September. 1, 2, 3, 4, 5. So a little bit of extra information. After 5 waves, usually we have 3 waves down. All right, but if we look a little bit further down, we see that we have a horizontal Senkou span B here. This is my slowest moving indicator in this indicator analysis, and that means that there is pretty decent support right here. Pretty decent support at about 95. So it does not look like the US dollar is going anywhere soon. That will change if this level breaks, but that's going to take some significant selling pressure or a major macroeconomic event, whichever happens. All right, let's move on to the next indicator, the Chikou span. The Chikou span is in open space, and that is where I like it. It's been in open space ever since it moved above price here, and even more significantly above the longer term or the intermediate term midpoint moving average here. Now remember, the Chikou span is plotted 26 days back, but it is definitely in the clear. That means that this baby is trending. It is trending, and there's no stopping it right now. There is a lot of open space here. This thing can trend until it hits or interacts with price here. So even if we go sideways, there is a significant amount of time before we're going to hit price. If we go down, there's a significant amount of space before we hit price, and we have open skies, blue skies above here. So the dollar can continue to rally strongly. Do not be short the dollar here, not until it breaks below the cloud. Moving on to the next chart, what do we have here? We have crude oil, the WTI crude oil. Well, this is a horrific looking chart. Let's look at the cloud. The cloud is way up here, and price action is down here at $56. That looks horrendous. I would not touch this thing with a 10-foot pole right now. And if we look at the midpoint moving averages, here's the 9-day, here's the 26-day. They are significantly above price. This is at 60, just under $65. The fast one is at 59.5. That's just horrendous. Okay, I'm not gonna comment more on this. Just a quick note on the Chikou span. My favorite indicator. Once it broke through price and the cloud, it was an open space, and you gotta watch out below here, and it just plummeted. All right, so this is what you love to see as a trader. You love to see this happen and followed by this. This means it is trending. There is no support here. There is no support. It broke the cloud, it broke through price, and it can just continue to fall until it hits some kind of support levels. All right, moving on to the next chart. What do we have up next? Gold. Okay, gold not looking that stellar. We are relative to the cloud, we are above the cloud. Oh my goodness, how did that happen? Look at that. Price is trading just off the upper edge of the cloud. There it is. It found support at my second most favorite indicator, and that's the Senkou Span B. This is the long-term support and resistance line of the cloud. It's this red line here. All right, that is a fantastic support and resistance level. And look at gold. It found support. It actually just plunged below and it moved all the way up. So it plunged below and it came back up, and it even went as far as to touch the midpoint moving averages. So clearly this thing is finding some kind of support right here. We'll have to watch out and see what happens. Look at the future cloud. The future cloud says the direction is up. It is positive. It is definitely indicating some kind of positive move up here. So as long as this Senkou Span B holds, this cloud holds, we might be moving up here. Okay, it depends on what happens with these midpoint moving averages. If gold can push through them and close above them, well, that would be a different story. Okay, looking at the price action here from the low, it does not look impulsive at all. It does not look impulsive. The only positive thing that I can really take away from this chart is that it is trading above the cloud. Okay, so trading above the cloud, below this midpoint moving average set. And now look at the Chicago Span, my favorite indicator, and it is stuck. It is definitely not going anywhere fast here. It is interacting with price. It is a little bit away from price, but look at where it is. It is stuck right in the middle of the cloud, and that means more consolidation ahead, and that might lead to us just moving sideways here. And worst case scenario is we break down through price and we find some kind of support level down here. Okay, but let's not speculate. Let's just leave that up for the price action in the future to determine. All right, so overall this chart does not look very bullish. We have found support, but there is significant overhead resistance in the midpoint moving averages. Moving on. Here is the ETF for the 7 to 10 year US Treasury bond. And let's see what the price action has for us here. Relative to the cloud, price is below it, and that would be negative. It is trading in, it's bearish, it's trading in the cloud, and as soon as price action is closing in the cloud here, it means consolidation. And consolidation means sideways moving action, volatility. This is not a good place to be entering into a long trade for sure. So watch out for more volatility in bond prices. Okay, let's look at where it's trading relative to the midpoint moving averages. Here are my midpoint moving averages. I have definitely found some kind of a support here. It is trading prices above the midpoint moving averages. We are moving up, but we are stuck in the cloud. The Chicago Span is looking, well, not too bad. Look at the Chicago Span. This is my momentum indicator of this Ichimoku Kinko Heijo analytical system, and it has actually closed above this red line, which is my 26-day midpoint moving average. Now, the way that these midpoint moving averages work is they work like a very strong rubber band. So don't think that this is necessarily a breakout. It can definitely pull it back to the midpoint moving average. And that is confirmed by the next indicator, which is the Senkou Span B. Look at this. This is one big horizontal resistance level right here. It is not going to be easy to get through this level. It is stretched out all the way into late December, and that is not going to be easy, ladies and gentlemen, at all to break. The only way we break through this is if we have a couple of closes above and the Chicago Span moves up. But even if that happens, there is not going to be any trending going on here, because look at the Chicago span. Even if it moves up, it's going to move up into this horizontal resistance level. So yeah, I don't see any impulsive moves coming here soon to the US Treasury bond market. We'll have to wait and see how that develops. But the only thing that would get me bullish is if we can close above this cloud without moving back into it. Because remember what I said, these resistance levels function as like rubber bands. They pull price back to them. So there has to be a significant move above them to cause any kind of trending move. All right, let's leave that there. Next up, we have a speculative sector, the GDX. That's the Senior Gold Miners ETF. Let's look at that. Well, also not too inspiring, that is for sure. Let's look at where it's trading relative to the cloud. It is trading in the cloud, which is not very bullish at all. That means consolidation. It is trading under these midpoint moving averages, which is bearish. So this is a bearish looking chart, but these things move like rockets once they get moving. So we have to look a little bit into the future here. Here we can look at the future cloud. The future cloud says that it is trading positively. If the cloud is red, it means it is selling off. The future cloud here is on a buy, which would be positive. It's a bullish indicator. But we better get there soon, because if we continue trading sideways and we come up against this Senko B, which is a very slow resistance area to cross, it's a very slow moving indicator. It's 52 days. That means that price has not moved above it. This is obviously the future cloud. So this is going to be a problem in the future if we continue to travel sideways or move sideways. If we can move up through this weak section of the cloud, the way the cloud works, the thinner the cloud, the easier it is for price to move through. So my speculation here is that we will probably try to break out here in this very thin section of the cloud. That would come at about the 26th of November. So that is still a couple of weeks away. So it will not be immediate, but we will probably follow this outer edge of the cloud and try to break out here. Okay, the Chicago spun, it's not very inspiring, that's for sure. It is trading technically above price. Okay, so the Chicago spun is trading above price, but there is very little open space before we interact with price action, and that's here. As soon as we start interacting with price, it's going to consolidate again, because we cannot get through that resistance level easily. That's the way this system works. It gives you an indication of what to expect in terms of resistance and support, and this is not very bullish at the moment. Okay. All right, there's nothing much to say about this. We are definitely bearish on this, but it has potential to develop as soon as we can get above the cloud, and this is my target. I am looking to break out here at around the 26th through this weak section of the cloud, and we better do it, because if we don't do it, this will definitely be ultra bearish, at least through December. Well, that's not going to be a happy Christmas for any gold bugs, that's for sure. All right, getting to our chart of the day. Our chart of the day is Apple, and our stock of the day is definitely not looking that hot. Wow, for those people who love Apple, I'm not necessarily a big fan. I just trade whatever my system tells me to trade. So you can say I'm agnostic. Let's look at where it is relative to the daily cloud. Here is the Kumo cloud, and this price action is happening all below the cloud. That means that in terms of this system, this is a no-go area for me. This is not a positive chart. This is bearish. and I would not be buying in here because the resistance up here is pretty decent, and we don't know where the support is here. I don't see it on this chart necessarily. There are no support levels going back 6 months. This is a 6 months chart. There are no support levels here. Definitely not according to the Ichimoku system. All right, so usually we look at a shadow. We call it a Kumo shadow, and that would be a flat section or a horizontal section of the cloud that serves as some kind of an indication of where support might come in a falling market. But I can tell you here, there is nothing. There's nothing here on this daily chart. If you guys are interested, I will have a look at the weekly chart. But let me know in the comment section if you are interested in a weekly look at Apple. Okay, so let's just go through the indicators. Here are my midpoint moving averages. Wow, the price is far removed from them. Look at that. The midpoint, the shorter term or the faster moving average is at just under $200. Price is trading at 186, 187, and the midpoint moving average for 26 days is at over $205. So yeah, this thing has been falling. It's been falling seriously. From 232 all the way to 186. That is a nasty looking move to the downside, and I don't see any support here. Let's move on to our next indicator, the Chicago Spun. Now again, this Chicago Spun, it moved through price. Look at this volatility, this consolidation action that is represented by this section here. So this price action here, this consolidation as it moves into the cloud, is again represented here as the Chicago Spun interacts with price. Remember, the Chicago Spun is plotted 26 days back, away from the price, behind the price. So it is a momentum indicator, and it tells you if it is trading below price, that price is not trending bullishly. If it's trading below, it tells you that price is trading bearishly relative to price. That the Chicago Spun is trading bearishly relative to price. All right. So this was a nasty move down. We found some support in the cloud here. And look at that. Once we broke this part, that would be this move here, this day here. That's 2 days ago. What would that be? Monday. So Monday, we had a massive move down from about the 200. Look at this gap here. We had a move down. We broke through the daily cloud. And this is now an open space. We call this open space. And once we hit open space, what happens? The possibilities and the probabilities of a trend developing is massive. It's huge. As soon as this indicator is an open space, it means that we can start moving in a direction at speed. Okay, it's momentum. This is what you want to be trading. I don't trade short. I wouldn't have shorted this, but this is just a little bit of information about how the system works. All right. Similarly, if we look back on the chart, look at what happens. This indicator, the Chicago Spun, broke out of price. This is consolidating. It's messing around. It's choppy price action. And then we move from price. We break through price. And now what's all this? It is open space. It is blue sky. And price responds by moving up significantly. So in the same way we moved up significantly when the Chicago Spun broke out here, we are moving down significantly because we broke through the cloud here. All right. Now, ladies and gentlemen, thank you very much for listening. If you like what I did here with the Daily Market Wrap, please let me know in the comment section. Please subscribe to the service and hit that notification button for more reports and more daily wraps, as well as what the Stock Serpent watchdog was created for initially, and that is to comment on any YouTube investment enthusiasts and mainstream investment enthusiast stock picks, so I can analyze them according to my Ichimoku Kinkoheo stock analytical system. Everyone have a good day and good trading.